नमस्ते दोस्तों, आपका वैल्यू एजुकेटर चैनल में स्वागत है, जहां आप सीखते हो स्टॉक मार्केट में इन्वेस्ट करके आप कैसे पैसे बना सकते हो। तो मेरे साथ आज है विनायक सर। तो विनायक सर ने वर्चुअस कैपिटल, ये जो इन्वेस्टमेंट फर्म है, वो रन करते हैं। एंड विनायक सर ने एक स्टॉक में ऐसे इन्वेस्ट किया था कि ही हैज क्रिएटेड अ 50 बैगर आउट ऑफ इट। तो हम आज उनका जर्नी जानेंगे कि वर्चुअस कैपिटल कैसे शुरू हुआ, ओवर द पीरियड ऑफ टाइम उन्होंने कैसे इन्वेस्ट किया, व्हाट इज द स्टॉक सिलेक्शन प्रोसेस, वो कौन कौन से अलग अलग बिजनेसेस उन्होंने अब तक चूज किए हैं। उन्होंने मोस्टली अनआइडेंटिफाइड कंपनीज में इन्वेस्ट किया है, तो उनका प्रोसेस क्या है बिजनेस सिलेक्शन का, या इसके अलावा वैल्यूएशंस के बारे में हम डिस्कस करेंगे। एंड ब्रॉडली हम डिस्कस करेंगे कि इंडिया में आगे जाके क्या क्या अपॉर्चुनिटीज है, वो कैसे सिलेक्ट करते हैं अलग अलग बिजनेसेस को, वैल्यूएशंस के बारे में देखेंगे। या वन ऑफ द मोस्ट इंपॉर्टेंट पार्ट इज उस प्रमोटर को कैसे सिलेक्ट करते हैं, बिकॉज इट इज वेरी वेरी इंपॉर्टेंट थिंग। तो ये वीडियो में हम हर एक टॉपिक के बारे में काफी डिटेल में डिस्कस करेंगे। सो पहले हम शुरुआत करते हैं। वेलकम विनायक जी, फर्स्ट ऑफ ऑल वैल्यू एजुकेटर चैनल पे। हमारे चैनल पे रिसेंटली 1 लाख सब्सक्राइबर्स कंप्लीट हुए थे। तो लेट्स स्टार्ट विद द वर्चुअस कैपिटल एज अ इन्वेस्टमेंट फर्म या इन्वेस्टमेंट कंपनी। इसकी शुरुआत कैसे हुई थी, कभी आपने इसकी शुरुआत की थी, एंड ओवर द पीरियड ऑफ टाइम आपका जर्नी कैसे रहा?
Thank you, Shashank. Thank you, Value Educator. See, myself, Vinayak Kudwa. I started this investment company, Virtuous Capital Limited, somewhere 1st June 99. So this is 25th year for us. And at the age of 24, 25, I started this investment company with an idea to invest in SME space. ये idea इस तरीके से आया कि 99 was a period where Vajpayee was starting his first full 5 year of leadership in Delhi. And that was subsequent to Pokhran blast which had happened, and Vajpayee was successfully taking over the legacy of second leg of liberalization in India. And Pokhran blast was a very very landmark event for India, wherein globally, including Europe, US, Australia, Japan, Canada, they all had blacklisted India for any sort of assistance. तो मरता क्या नहीं करता, ये देश को बस प्रगति पे लेके जाना था, प्रोग्रेस करना था. सो मेड इन इंडिया हैड बिकम मेक इन इंडिया एट दैट पॉइंट ऑफ टाइम. एंड अगर रिलायंस, हिंदुस्तान लीवर, नेस्ले, एल&टी जैसे कंपनीज को ऊपर आना है, अगर देश को ऊपर आना है, ये टॉप 100 कंपनीज ने प्रगति करना है, प्रोग्रेस करना है. और ये टॉप 100 कंपनीज ने अगर प्रोग्रेस करना है तो इनके नीचे इन्हें लाखों एसएमएस लगेंगे जो इन्हें ग्रोथ मोड में सपोर्ट करेगा, इनको ग्रो होने में सपोर्ट करेगा. So there is where we were very clear कि India has reached a stage where there are lot many SMEs are required, and in this journey we had nothing to lose when we started this business. Right. So yes, so 1999 we started this business with an idea to identify SMEs, get engaged with SMEs, know their problem and strength, and then subsequently invest in SMEs. Right. So this is 25th year for us, and a very good journey for us.
Right. So many congratulations for you for completing 25 years successfully. That is most important. So coming back to the point कि जनरली हम जब भी इन्वेस्ट करते हैं या कोई भी इन्वेस्टर लॉन्ग टर्म के लिए जब इन्वेस्ट करता है, वेरी इंपॉर्टेंट थिंग इज लाइक सिलेक्शन ऑफ द बिजनेस, राइट प्रमोटर एंड राइट वैल्यूएशन. So starting with the right business, so what are your frameworks or what are your criterias or filters? Because there are like हम तो mostly listed companies में काम करते हैं, so there are like 5,000 listed companies, or even private companies might be more than listed companies. So out of such a large pool, how you select one or two opportunities and reject others? Because generally जब भी हम successful investors के साथ बात करते हैं, they say कि rather than selection, it is more important कि आपका रिजेक्शन क्राइटेरिया शुड बी सो स्ट्रिंजेंट सो दैट आपका गलती काफी कम हो जाता है. व्हाट आर बेसिकली योर फिल्टर्स और की थिंग सो दैट आप ये चीजें देखते हो, एंड दैट इज हाउ यू आर एबल टू सिलेक्ट द more and more successful companies? What is that framework, if you can elaborate on that?
See, I am 50 years of age. I started this company when I was 25 years of age. So that was an era, 99, digitalization had not come in this country.
Right.
And all other than the top 10 companies, I would say in today's mathematics, all those companies were mid corporates only. Either India had mid corporates or India had ultra large corporates.
Correct.
So we come from an era where data or information was not easily available. Forget about closely held companies. For listed company who were listed in BSE stock exchange, which was an only prominent stock exchange, unka bhi getting financials, getting balance sheet was very, very difficult.
Correct.
That was an era where quarterly result, half yearly result was not available. The information used to come only end of the year when AGM balance sheet used to happen. So we come with a mindset where information is not easily available because we belong to that particular era. So getting information was a challenge. Right. We remember traveling from Kashmir to Kanyakumari, whether it is SRF, a company based out of 3 hours journey from Chennai railway station, or it was a Berger based out of Calcutta. Right. So we used to travel a lot and we used to behave like a forensic auditor to dig information as much as possible. For someone like us who started in that era, the current era, it is very, very easy for us to identify an opportunity because today digital era, information is easily available in with your mobile or in hands of any people. So getting information is pretty good. Coming back to our subject, SME word is not valid because almost all, including Reliance, they all were SMEs in this country.
Right.
So today, most of the successful large corporate were SMEs, and we have lived and we have seen their journey till date. Only thing is, today the advantage is information is nicely available.
Correct.
See, irrespective of how small your product is, how small your industry is, how small the size of your balance sheet, if you are aligning yourself with the progress of this country, whether the leadership needs this particular company, this particular industry, that means you have a space in this particular country. Growth by default will come. So we, other than identifying a product, the financials, the promoter, the company, we give much more importance to your existence in this country. Are you one of the 1,000 player? Are you one of the 100 player? Then you have no role to play. SME is fast going into consolidation mode. You should be the top 3 player. भले ही आपका इंडस्ट्री साइज 1 करोड़ का हो, 5 करोड़ का हो, 10 करोड़ का हो, if you are a significant player in this particular industry, in a country like India, which is a big country full of competition, अगर आप top 3 player हो तो आपको मरण नहीं है. Profits can follow, funds can follow, equity can follow, rest all can follow, but has your business made you reach a stage where you are top 3? Then the survival is there.
So that means the market share of your investment or whatever you are trying to identify has to be much bigger and continue to improve going forward. That is also very important after investment, generally what investors track. So after identifying a business, generally like we also look, or any investor also look for the competition. So how you look as a competition while identifying the right business, because understanding a competitive structure in any industry generally helps when anyone is a long-term investor. So can you use some references, or can you give like what has happened on the competition side out of your investments or out of your journey, or such a vast experience of more than 25 years which you are there currently in this industry? So how you look the basically a competition while choosing any investment?
See, I will answer this in other way around. This is very big country. India is a country of SMEs and micro SMEs. So probably you can divide the world between India SME and rest all SME. So there are millions and millions of quality SME. That doesn't mean that all those SMEs will survive, all those SMEs will do well in this country. So the challenges are very, very big when you try to filter the companies from Kashmir to Kanyakumari or Calcutta to Bombay. It is not possible. The best way is you get engaged with large corporates, whether it is the flag bearer in each industry, whether it is Dr. Reddy's and Sun Pharmas of the world in chemical and pharma space, whether it is L&T or those sort of player in engineering space, whether government agencies in defense space. So you select a large company and get engaged with them. They will take you to niche companies in SME space. They will give you more information about the existence of that particular SME, what value addition that SME is doing, what sort of problem SME is facing, what are those strengths and weaknesses. So it is much easier to reach out to SME via a large corporate to whom they are servicing. Right.
So let's come to some of your investments. Like recently, one of your investment has been a more than 50 bagger. So we'll come to that. Firstly, like how you identified this investment, the name of the company is BW Engineering, which listed about 2 years before. But I think your homework or hard work would be much beyond 2 years. So how this company you have identified, and after that, like then how you stayed committed for the investment for such a long period of time, where generally most of the new investors want to earn every day, every week, and every month.
See, our background gives us lots of ability to sit, learn, and do nothing.
Right.
So we have to learn to do nothing, and which is very, very difficult.
Correct.
So we had never any great interest, idea, and still we don't have knowledge about stock market. So stock market play by default it happened because it was happening at a happening stage. Who are we? We are the people who identify SME opportunity, stay invested in them, and look and strategic exit in those SMEs. Financial exit is not, financial investor coming and buying us out is not our exit area.
Right.
We as an investor, when we identify to invest, so we should look about exit. So company buying us out, ruled out. Promoter buying us out, ruled out. Financial investor buying us out, ruled out. So the theme which we carried 25 years back is we will identify an opportunity, stay invested in that opportunity for a period of 7 years. That is a period where this company would have grown 4 times, if not 5 times. Their EBITDA would have grown up double the growth rate compared to top line. And that point of time, the global industry leader as well as industry leader locally would come and buy us out. This was our strategy of investment and making return out of it. So we are used to a grinding process where we stay invested for a period of 7 years.
Right.
So stock market is something where there are two kind of people, where someone would look exit in a day, someone would look and exit in a year. But we really feel a stock market is also a replica to what we do. You should really look for a 5 years, 7 years journey. That is where most of the Sensex index stocks as well as SME stocks will really perform, and exit is possible. So due to very nature, we stayed invested for 7 years in BW, and that journey, if you end up identifying a right promoter, right product, right industry, then returns are supposed to come. So that's not a big deal. So
Right.
SME is where an opportunity is much, much bigger. The growth is much bigger. The consolidation is much, much bigger. So yes, SMEs are the space. 10x, 20x, 30x is very much possible.
Right, sir. So taking this discussion forward, generally like the marquee investors like Peter Lynch and everyone talks about the proxy investing, and that is what you might have done in hindsight or purposefully. I don't know. I'll ask you the same question. So BW is nothing but a proxy for the chemical and the pharmaceutical industry, which started growing very well in last 4-5 years. So how you see the proxy as an investing? I'll just quickly introduce about the proxy investing. Is nothing but like if the end industry is growing, then you choose the suppliers or the vendors for the same industry, and then you invest in those suppliers instead of investing into the final product. For example, I have invested in a company called as Action Construction Equipment, which was a proxy for the infrastructure development which was going, because I couldn't identify the right company in the final infrastructure because of various issues from the government end or the working capital issues. While Action Construction balance sheet was very good, they were there doing quite well, and finally that growth has came due to the infrastructure, whatever growth which was happening. And generally the proxies are very safer kind of companies compared to when we bet on the end industry like infrastructure. So sir, I have the similar question for you, like why you never invested in any pharma company or a chemical company directly instead of investing in a company like BW, which was the proxy for pharma or chemical sector?
See, proxy industries are much easier to be identified. When we talk about pharma, so there are n number of contract manufacturers who do formulations or who do bulk drugs or API. So it is very, very simple concept. But rather than looking into that, what we should do is a proxy sector is a sector where we say a proxy player is a player who would go with the theme. What is good for India? Right. What is good for this country? That is good for me. So there is where we ended up identifying all our opportunities which are nothing but a proxy sector with a leadership status.
Correct.
So BW, we were very clear with our research in 2014 that this country will need to get out of control of China in API and chemicals. wherein certain key chemical component there, they have some 90 to 100% monopoly.
Right.
So we were very sure lot many chemical companies will come up, government will have to come out with the good incentives for sector. So rather than identifying an opportunity among hundreds of chemical company, hundreds of formulation company, it is very, very easy to identify a proxy sector. This industry doing well, the proxy guy will be the first biggest beneficiary.
Right.
So that is how we identified BW Engineering Limited, which was a clear-cut proxy within high potential process equipment company for any basics to high-end chemicals as well as bulk drugs.
Right. And related question to that, sir, like when you invest, generally the financials are not that strong. I mean the profitability, because the retail investors generally look for the P&L statement. The balance sheet and cash flow is also part of the financial statement. But when you generally invest, I have seen that the financials are not that great. So what exactly you look while filtering out of so many industry? Is it a promoter? Is it a product differentiation? Is it the strength of the balance sheet? Is it like the competition is very weak? Or n number of other criteria? So what exactly are those probably 2-3 criteria? If you can tell us about to our investor, because when you probably invested or when the BW IPO got launched, it was hardly doing any profitability, and over the period of time, the profitability has increased. But what gave you the conviction to invest such a large chunk when you invested in this company or any other investments?
Yeah, see, this is a good question. I'll give a thumb rule, a point against this particular question. See, you can never build a P&L.
Mm-hmm.
Okay, so P&L has to be genuine. P&L is supposed to have a depth. Okay, balance sheet part can have a problem. The balance sheet part problem can be rectified. Balance sheet part, in a sense, it is linked to debt and equity.
Correct.
Debt can come, equity can come, and it can solve the problem of balance sheet. But there has to be a P&L. That P&L has to be genuine. The P&L has to be good. This is one thumb rule which is very, very clear. This company is supposed to have a revenue model, business model, which is keeping him in business. Balance sheet problem, balance sheet weakness can always be rectified with money. Money can't bring in business. Money can solve money-related problem.
Right.
So taking this point ahead, what we should know, in last 3 decades, doing business in this country has become very, very difficult with money point of view.
Correct.
See, SMEs started crowding in last 3 decades when money was easily available.
Right.
From bank loan, from real estate inflation, from the growth happening in this economy. So money was easily available. There is where large number of SMEs or ultra micro SMEs got created. This is an era where we are entering of consolidation in SMEs.
Right.
So raising debt is very, very difficult. Raising equity has become very, very difficult. So this is a stage where an SME has survived all this bloodbath. Post demonetization, I don't call demonetization as a problem. This was the best thing to happen for this country. But lot many wrong companies who were there in business, they had to exit because of demonetization. GST coming in, there was level playing field because of GST. Lot many SMEs had to exit that. Then the banking consolidation happened where the easy availability of loan dried. And biggest was, last but not the least, last decade we saw the lock, stock, barrel migration of equity from SME space to startup space. There is where the last ditch problem came in for SME and the consolidation was must. There is where I would say 50% of the SMEs who were there in business, they had to let go their business. And against this, their principles, the large corporates were growing at 15% CAGR. So that means the real importance of SME had to come. The business is available, but doing business from finance point of view was very difficult. So we identify an SME where the receivable risk is not there.
Okay.
We will never look to invest in a company which would have 3 months, 12 months, 3 months, 4 months or 6 months of receivable. No, the receivable should be less than 1 month. So if a payment risk is not there, that means your customer values your product, values your services, he pays you on time. That means there is no problem of money. Then rest all can follow. Equity is much easier, debt is much easier compared to a customer not paying you on time. So one of the foremost which we see in all our investment is that receivable risk should not be there in the business.
So I've seen in your investment sometimes, like for example, let's take the example of BW, where the receivable risk was not there, but inventory was always bit elevated. So what you're trying to say is the inventory risk can be managed with the funds or equity, while receivable risk is basically directly dependent on their customers, which the company cannot solve once they start the business, if I'm right.
Yeah, you are exactly right. Over there also, inventory should be seen whether that inventory is clearly mapped with an order in hand.
Right.
So BW is a very, very classic case. The inventory what he keeps is partially funded by his customer. So 100% of his inventory is against his order in hand, which he has got from top AAA companies of this world as well as in India. And those customers have funded 15 to 25% advances towards that inventory. So otherwise, purely without any order in hand, you are dependent on inventory holding risk is there, inventory holding cost is there, inventory can get devalued. So inventory is equally risky, but a very nature of BW, it got de-risked with an inventory which was completely hedged with the order in hand as well as the advance received from the customer.
Right.
So it was much very clearly safe. There is no risk at all on those inventory.
Right, sir. So after that, coming to the promoter point, as Warren Buffett says, he generally sees three things when he invests into any company. Basically, like how he identifies the management. First thing is integrity, second thing is intelligence, and third thing is energy. And then he says that if a person don't have the first thing, which is the integrity, there is no use of other two. So coming to you, sir, like how you identify the promoter, because again, it is a very, very key aspect while we invest into any company. Like, will you invest in any great business which is ran by not so great investor? And particularly in India, if you compare India versus US or any other geography, we have the biggest risk, which is, I think, comes to the promoter. Like Warren Buffett also says in US that for him the business is most important. If the business is great, it can be ran by any Tom, Dick and Harry. But I generally don't agree with that concept in India. So, like how important it is for you to have a right promoter for your investments, and how you identify it.
See, India is a promoter-driven economy.
Right.
So whether it is a large, ultra-large corporate or whether it is an SMEs, you still find the promoters running it successfully. And as well, you will find the promoters doing what sort wrong things and taking company into doldrum. Let us talk about positive things. But first point is India is a promoter-driven economy. Correct, so that you can't ignore. Third thing, when you mentioned about Warren Buffett, most of his investments were a buyout which he did, were a promoter-driven company which has spent 30-40 years in business. They have built a quality business. Right. Such businesses were acquired by Warren Buffett, right, which made Warren Buffett what he is today. So what we see is there are n number of ultra genuine quality promoters in this country. But how do we identify whether this promoter is good, whether he is not robbing his customer, he is not robbing the government? See, government systems made that very, very difficult. GST coming in, correct, the income tax getting liberated. So it is much easier to identify whether the promoter is paying taxes or indirect taxes. Avoiding was impossible. It is much easier to identify a quality promoter, quality company via his customer. Okay, so always exactly. I give much more importance to the supplier, the customer of that particular company. So we have taken trouble to identify certain SMEs where we have engaged with their customers based out of Bangladesh, based out of Europe, based out of India. So our job is much easier, much difficult. Rather than getting into a forensic audit of a promoter, you better interact with Hindustan Liver. They are much open. L&T, Sun Pharma, Dr. Reddy's. You go and attend exhibitions in Southeast Asia, Europe, US. That is where a customer reference you get. Right. So customers are the best feedback or a rating agency for identifying a good and bad promoter.
Excellent. So this is nothing but what I talk about the scuttlebutt. Like you have to go on ground, you have to talk to their customers, suppliers, and I feel the employees also. That can give you the genuine feedback about like what's happening into a company, how genuine is the promoter, what are their principles and all about. Coming to the similar point, sir, like if I see your investments, how you you rate the quality part versus the quantity? Because I also I am running the microcap club where everyone wants newer and newer ideas every day, every month, every week, versus identifying a very limited kind of a new ideas, probably 1 or 2 or 3 every year. So how you rate the quality part of the investment versus the quantity? I hope I'm clear on this point.
See, we avoid a technology space.
Okay.
Technology is something which we feel is very difficult to understand or very difficult to grasp the future potential of that particular product. It is much easier for a product which you can see, feel, touch,
Right.
and then get engaged with customer. See, all my investment are with a thesis which we run is what is good for country, what this a layman on the road can see, touch, feel, and identify a product.
Right.
That product is much easier to identify, and there is a very clear growth available for those sort of companies. What we saw is, we'll again give an example. A country like India, where we have a strong global leadership for formulation,
Right.
where other than US, the largest number of US FDA formulation companies based out of India, then the whole industry is debt free. Okay, so today we can say an agrochemical, specialty chemical, along with the pharma chemical is debt free. But we are completely dependent on import from China.
Right.
So we were very clear when this economy is doing very well, their customer globally and locally is doing very well. That means this company, this industry has ability to invest in a space to get rid of China dependency. So
Right.
there is where BW came into picture. But we more or less what we look is whether this product, this company is required for this country. This country is very, very competitive country.
Right.
So in this competitive large country with large number of SMEs, if you have proven your presence, that means you don't have debt, you have only growth available.
Right.
And growth is also a challenge. What we try to say is how bigger is a growth, and capitalizing that growth is what kind of challenges this SMEs will come. Whether that promoter is prepared for such sort of challenges, whether that promoter would want to have that kind of growth. All promoters, most of the SMEs, 90% of the SMEs are not prepared for growth.
Right.
So they would have a great product, great company, great balance sheet, but they are not at all prepared for growth. So such sort of promoter, if you bank upon with your investment, you will definitely not get the great return. You will end up getting a dividend kind of return.
Right.
So growth is possible only if a promoter and that particular company is ready to take that risk and
Correct.
absorb that growth.
Right.
BW was one particular, we are speaking more on BW, but the fact is that promoter was very, very clear.
Correct.
Okay, I am ready to slog out for that particular growth. So
Right.
yes, this is what another point which I would want to make.
I mean, my reason to ask the question was basically how many new investments you find in a year. It might be probably 2 or 3, may not be like 15 or 20 new investments. So having focused on like less amount of opportunities is more beneficial compared to the larger volume in a particular year. How you?
We had limitation of funds till 3 years back because all our exits were spread over for a period of 7 years.
Right.
We never raised any equity or we never raised any debt. It is a proprietary book which we are carrying. By the way, today it is a 150 crore proprietary book for us. So SME platform played a very vital role for our growth because we could make an investment and get it listed as fast as possible. So our investment had a quick exit role also. Having said this, we have stayed invested in 18 opportunities, and this opportunities we always try to identify an opportunity which is a structural change which is happening in that particular industry.
Right.
Whether it is BW, where we saw structural change happening in an industry, or we can say I would love to speak about an Ayurveda opportunity which we invested called Vaidyasane Ayurveda Laboratories Limited.
Right.
Their brand is Madhoba. So whether it is Ducol, the another opportunity which we saw. So we try to identify an opportunity where a structural changes is happening, a complete change of behavior is happening, the complete economy is looking to change itself. So one particular opportunity which I would want to say is, look, retail. Mm-hmm. You talk about retail, that means it is an FMCG sector.
Correct.
FMCG sector is the second largest $800 billion contribution to our GDP. It is $3.75 trillion GDP, $800 billion comes from FMCG. FMCG is nothing but a retail. FMCG and retail, if you see, once in a lifetime, we are seeing a structural change.
Right.
See, at one side, 100 large Nestle or Hindustan Levers of this world are there in India, and they are hungry for growth because growth is available only in this country. 15% growth is available. Second stage, there are Reliance and DMart of organized retailer who are coming in and who are growing very, very fast in a big country like India.
Correct.
Third stage, there are digital companies like Flipkart or Amazon are coming in and trying to grow this particular industry. So what we saw is once in a lifetime, we are seeing this particular change in retail sector, which is nothing but an FMCG. Can we identify an opportunity into it? Can we stay invested in that particular opportunity? So we identified, and company is into pure FMCG distribution business, where they are playing a critical role among these three entities. They make product from Hindustan Lever reach to that retailer. They make Reliance ka captive brand like Campa Cola reach to the retailer and consumer. And they try to make, in future, they would try to make an opportunity of Flipkart and Amazon product to be delivered to end consumer in that particular geography. And yes, this particular company is in a rural area which is very, very difficult to operate and do business. But that is where the growth is available. So we try to identify an opportunity where a structural change is happening, but a business is already there. And your competition is very, very weak. They don't have ability to raise debt, forget about equity. But growth and business is very really available.
Right. So growth is definitely an important part in any particular investment, along with the quality of the business and quality of promoter. So can we talk about your other two investments of...
Yeah, see, this is very interesting point I would want to make. The way we identified this distribution business. This distribution business, currently this company is some 50 crore odd revenue. We strongly feel, we don't want to speak on figures, we strongly feel that there is huge growth available, there is market available, you need to invest in that particular opportunity, and this investment can't come in form of debt, it has to come in form of equity only.
Right.
So we took a big risk to identify this opportunity and put money. The same way, we identified an opportunity which is, again, I call not a right way, but I call a proxy to IT sector.
Correct.
See, IT sector is well discovered a story for last 2.5 decades. So it is growing anywhere between 8 to 10% growth rate, which is there. And IT sector is there to grow for another 2 decades, but the growth will be percentage wise very less because the size of that industry is very, very big.
Correct.
So rather than staying invested in those hardcore IT companies, we identified certain proxy sectors which are there in the sector. One is this employee transportation opportunity. What this company does is, this is a company which is purely into logistics business, providing employee transportation for their employees to pick up and drop from their home.
Correct.
But when we really went inside, spent time with Capgemini, Accenture and L&T Info of this world, we got to know the size of this industry is 20,000 crore.
Right.
So out of that 20,000 crore size, can we look at an opportunity which will probably go on to become 1,000 crore revenue? Yes.
Correct.
And this is a sector which has gone through a bloodbath in last decade. There were disruptions coming from Ola, Uber kind of companies. There were disruption coming from the GST regime. There were disruption coming from bank loan not easily available. And last but not the least, there was disruption which was a death kind of situation in COVID period where this industry was completely closed down for 2.5 years. But from here onwards, we see a substantial growth. So we identified a debt-free cash-rich company who has a lovely relation with all their principals who are not only IT companies from local market, but they are like all multinationals based out of Barclays, they are JP Morgan or they are Goldman Sachs, they are catering to this sort of companies. Right. Another big disruption which is going to happen in that particular space is a migration from diesel CNG vehicle to e-mobility, that is electric vehicle. So this, if we can capitalize those companies rightly in equity, then this company is in far better position to capitalize the growth which is available. Right. And further we learned from a Capgemini kind of companies that they don't want to deal with large number of SME. Mm-hmm. Like they are very clear that we would want to deal with very few SMEs, engage with them, give them better terms and make them grow so that our cost of managing SMEs are very, very less. I will repeat again. The big challenges in this decade for SME is to manage the growth.
Right.
Many promoter-driven SMEs spread over in this country, they are not prepared for growth, neither from their family point of view, nor from succession point of view, nor from employees' bandwidth point of view. It is very, very difficult. Because let me give an example. Deep interior of this country, getting a company secretary, getting a chartered accountant, getting an accountant, getting key people is very, very, very difficult. So that is the reason most of the SMEs are not prepared for growth. Right. So someone who is prepared for growth, where we can stay invested, the growth is easily available.
Right. So coming to the future themes, like where do you see India is progressing, and then you are aligning your investments along with the India, be it the import substitution story which has started after the China Plus One, or be it Atmanirbhar Bharat. The government of India is supporting these companies or sectors with PLI scheme. So can you talk about the broader themes, if not companies, like these are the sections or selections which you have already done or in the process, and what could be the right themes for next 1 or 2 decades for India or for Indian investors?
See, last 3 decades, each government played a very important role for this economy as well as for SMEs. You can't term this particular government had big contribution, that particular government had less contribution. In last 3 decades, from Manmohan Singh to Vajpayee era to Modi era, everyone played a very important role. Today, what we should clearly see is, first time in our lifetime, we are seeing a inflation related problem in Europe, in Australia, in Canada, in US. Last 30 years, Japan was looking for inflation, and the current level of inflation, once it comes, even Japan would not be able to absorb. That means the cost of India always lived with inflation. Right. India has made samjhota or friendship with inflation. Right. So inflation is not something which is very, very difficult for us to manage. But it is impossible for a regulated country like Europe, US, Canada, Australia, Japan. It is very, very difficult for them to manage. Right. So that means cost of production in that particular economy has become very, very expensive. Correct. So the goods manufactured over there are not competitive. After China, India is an only economy which has got very, very big captive market and skilled manpower. And globally, our leadership has made inroads where the economy has opened for us. So this SMEs can very well cater to global market. See, we never saw a value in agri-economy. Correct. So now, when Indian government stopped the sale of rice in export, there is where, or sugar probably will come in. There is where we realized that energy security is much easier compared to oil which is coming from Middle East, but rice and sugar and wheat can't come from anywhere else. Correct. So we are seeing an agri-economy which will contribute in much bigger way. We see a mining industry to contribute in manufacturing in much bigger way, wherein we can be a global supplier based out of India. So this SMEs will play a very, very large role for this product and services to go out of India.
So, last my 1 or 2 questions. So, why have you never invested into any startups, and why SMEs? What is the differentiation between these 2 categories? Generally, most of your investments are into the SMEs, but they have the long history of at least 10, 15, 20 years, if not more.
See, SMEs by default, they are into manufacturing and services. So manufacturing and services, one thing which we carry is we don't invest in any successful company which is 3 years, 5 years old. Right. A success definition for us, we are old economy guys. Wherein we see a success means a company would have seen couple of cycles. He would have spent at least 20 to 30 years. He is much humble, much wiser, and much experienced. Right. That is what we see missing in startups. We have very limited understanding about startup because startups are 3 years, 5 years in nature or 6 months in nature. Our theme of investment is that particular entity should have spent at least, or a promoter or a company or a team should have spent at least 20 years. So startups are definitely a new generation product where a qualified investor who has understanding about investment in that particular sector can only do it. We are not qualified to identify startups, understand startups, and see a change and behavior happening. Most of the startups are not manufacturing driven,
Right.
and neither they are service driven, they are aggregator service driven. So when we talk about service, we have invested in a company which is into fumigation business.
Right.
A 50 crore revenue company, India's largest fumigation supplier. So you name a company like Nestle, Cadbury, Britannia, or any agri commodity like ITC. So this particular company provides fumigation services to any imports and exports of any agri commodity happening in India.
Correct.
So why we invested is that this particular company is there in this business for 6 decades. More and more agri-related imports and exports are going to happen out of India. And these services are very valued services.
Right.
And the customer, they have retained this customer for last 5 decades.
Right.
But the same services are not seen in startups. The startup services are clearly not defined. So we can say our understanding about startup is very, very poor. So we have missed a great opportunity of investment in startups.
Right. So what I think sir is talking about is a circle of competence. I mean, you should do only those things which you understand really well. I think it is more important to focus on limited opportunities which one understands really, really well and then invest into them, rather than going and checking every other opportunity, because it is impossible to create the wealth out of every opportunity. Rather than if you focus on limited basically opportunities, you can create probably much bigger wealth.
This is rightly said, Shashank. Say there's 2 points you should take from me. One is be focused, learn to do nothing.
Right.
Okay, so
and which is very, very difficult, sir.
Which is very, very difficult. So learning to do nothing is very, very difficult. And second thing is stay focused, in a sense you can say learn to say no.
Okay, yeah. So that's what I started with. Like rejection formula is more important than the selection.
So learning to say no and learning to do nothing is a theme which we always carried. And probably that is a reason where we have not grown tenfold. But what we did last 25 years, we created a strong learning about one particular sector, which we feel this sector will be growth driver for this country. See, Reliance with 19,000 retail store and planning to have 1,000 different brands. It may be condom, biscuit, doodh, shakkar, shirt, pant, button, juta, anything and everything Reliance is going to manufacture, have their captive brand and sell someone else's brand. Reliance can't grow without a very 1,000 crore, 1,000 SMEs. Reliance need 1,000 SME, which each will be 1,000 crore in revenue. Right. So Reliance, it has a bigger headache, or L&T has a bigger headache, or Hindustan Lever and Nestle has a bigger headache to create and cultivate a quality SME. So I think the time has come. So not only this, next 3 decades belongs to SME, because country is there to grow. The large 1,000 corporates are there to grow. And India can be a global supplier as well as locally such a big market available for us.
Right. So it was great interacting with you, Vinayak sir. Out of your 25 years, we could learn most important things in this about a 45-minute session. So guys, if you like this session, please hit the like button, subscribe to Value Educator channel, and please let us know in the comment section that if you want more such videos where me and Vinayak sir will be interacting on various themes which will help India to grow and where one can invest. It is not definitely a recommendation, but it is just an information sharing, and it is an educational platform where we can share our learnings. I will host various investors like Vinayak sir. So please let us know if you want more such videos of interaction where the successful investors are sharing more about their personal journey, how they invested into various companies, where they see India is going to go in next 1 or 2 decades. So let us know in the comment section. I will definitely create more and more such videos which will help you to identify the right stocks and right sectors to invest for next 1 or 2 decades. So thanks once again, Vinayak sir, for having your valuable time, and looking forward for more such sessions going ahead in future.
Thank you, Shashank. Thank you, Value Educator. So this is lovely interaction which we had. So I would love to have such more interaction. What you are doing, it is very, very informative. It is not only for investor community, I would want you to go and speak at ground level at the management college. It could be in the school, higher schools. It could be college. So such what is happening and what is required currently in this country is कि we should give a power in the hands of student, wherein they need not look at only job as an opportunity in their career. SME manufacturing is an opportunity which can only absorb the 50 crore youth which is going to come educated in next decade. Right. So what you are doing is amazing. I would want you to go in much bigger way and continue doing what you're doing.
Thanks for your suggestions. So guys, I upload such a informative videos every Saturday at 11 o'clock. So don't miss these videos. Next Saturday also at 11 o'clock, I'll come with the new video on either a company or such a discussion session. So don't miss these videos. And if you have not liked these videos yet, please make sure that you like this video and subscribe to the Value Educator channel. Thank you very much.
Thank you.